What's going on, guys? All right, so before we get started, make sure you like, subscribe, and share, especially if you find this information useful. Help me out. If you find this information useful, YouTube's going to be like, oh, if he or she finds this useful, maybe he or she will find it useful. And they will find it useful. Regardless, it helps me out, and it also helps you guys out, and it gets more seen because it'll be more useful information being passed around. All right, so today we are going to go over basic trading terminology. Now, when you're just learning anything, it doesn't matter what it is. When you're learning anything new, there's basic terminology that may sound foreign to you, pun intended. Now, there's common abbreviations that you hear and you're like, what is that? So I'm going to make it where it's not going to be foreign to you, and by covering it today. So I'm not going to go over every single terminology. I'll go over the basic ones like bear, bearish, bull, long, short, SL, TP, RR, things like that. Now, the first one is SL, and that's short for stop loss. So stop loss is the amount that you agree in which if the market goes against you, this is the most that you'll lose before you're just out of the market. For example, let's say if I place a 20 pip stop loss, and the market is going against me. If the market goes against me at 20 pips, I'm going to be out of the market. If the market keeps dropping like 50, 70, 90, 100 pips, I'm okay because I'm now out of the market due to my stop loss. Using a stop loss is great because regardless, no one knows what's going to happen. Everything is literally just, my interpretation of the market. So if you're right, great. But if you're wrong, now you're using a stop loss to help you protect your capital. All right, so the next one I'm going to go over is the opposite of SL, which is TP. And TP is short for take profit. Now, again, TP is the opposite of SL, which is stop loss. So with take profit, that's the amount that you're going to agree for you to get out of the market and positive. Now, an example, let's say your take profit is 20 pips. With that, if the market goes in your favor 20 pips, you're now going to be out of the market. So the market can go from 20 pips, you're out of the market. It can go to 80, 90, 100, and so forth. It doesn't matter where it goes to. Once it hits 20 pip in profit, you are going to be out of the market because of the fact that your take profit is positive 20 pips. Now, the next one I'm going to go over is RR, and that's short for risk to reward ratio. Now, you may hear some traders say their trade is 1 to 2, 2 to 1, 1 to 5. It doesn't matter what it is. It can be 1 to 9 or 1 to 8. What they're really saying is that they're risking, if it's, let's say 2 to 1. If it's 2 to 1, they're risking 1 to make 2. So again, with that example, a 2 to 1 example, I'm risking $1 to make back $2. Now you can replace $1 figure amount I just gave you with anything. It can be a 2 to 1 in which I'm risking 20 pips to make 40 pips because that's 2 to 1. Now, your risk to reward ratio is based on you as the individual trader. I can't tell you what's right or what's not right because I'm not you. You can be a swing trader and I tell you it's 2 to 1. In reality, you should have like a 1 to 4 or something similar to that. Now, the next thing we're going to go over is bull, bullish, or long. Now, if you ever want to know why it's called bulls and bears, it's mainly because when a bull fights, bulls use their horns to go up. So with their horns going up, you're thinking that price is going to go up. So that's why you use bull, bullish, or long. It means that price is increasing. So let's say you're looking at the market, and you think that price is going to continue rising. You're going to say it's a bull market, or it's bullish, or it's going long. And then the opposite of that would be if it's going to go bearish, bear, or short. Now, the reason why it's called bearish market or bear is because when bears fight, they go down with their claws. So in that sense, if you're saying that the market is bearish, the market is a bear's market, or I'm going short on the market, you're anticipating that the price of the market will continue to go down. So again, guys, I want to just give you a basic terminology, basic trading terminology, so it'll no longer be foreign to you. So whenever you're on CNBC, or you're just on the news and you're listening to these terminologies, now you know exactly what they're talking about. So if you hear a trader say TP, they're talking about their take profit, or SL is their stop loss. Or if it's a bull's market, price is anticipating to go up. or if it's a bear's market, price is anticipating that price will continue going down. Now, if you're looking on how you can become a more profitable trader, learn about different trading terminologies, or how you can just become a trader overall, you guys can do a one-on-one coaching session with myself, or you can enroll in my Forex trading course, and I'll show you exactly how you can go about doing so. If you guys are interested in learning more about that, I'll put the details in the description below.